Introduction. Finance and retirement. They are the topics of many news broadcasts and TV shows. In fact, entire cable networks are devoted to them. I even devoted a great deal of time in my previous books, Busting the Retirement Lies and Busting the Financial Planning Lies, to the subjects. But upon further reflection, I may have been too quick to write those books before this one. Because before we can talk about saving, before we can talk about financial strategies, we have to talk interest rates. So much of the hype out there is pretty advanced. There are brokers screaming and quacking about which stocks to buy, analysts droning on about the next corporate merger, and advertising squawking about the next great financing deal. Amidst it all, we often feel embarrassed or intimidated to ask the most basic questions. Questions that were never addressed at home, in school, or any other formal outlet. This wicked combination of educational neglect and biased, overly sophisticated hype makes for a population ripe for the taking. And taken we have been. Leading up to the financial crisis of 2008, thousands upon thousands signed on to massive mortgage loans their moderate incomes couldn't sustain. With adjustable rate mortgages, ARMs, instead of fixed ones, interest rates skyrocketed after an artificially low introductory teaser period. With the end of this introductory period came the end of low monthly payments. And with the end of low monthly payments came the mortgage defaults. The results are now legendary: foreclosure, foreclosure, foreclosure. As the banks responsible for these subprime mortgages watched tens of thousands of these loans default, the homes that secured them plummeted in price. As a result, the banks themselves began to collapse. Consequently, the businesses that relied on the banks and the folks they employed faltered. Companies downsized and laid off workers. The result was a second wave of this economic disaster with the same result: foreclosure, foreclosure, foreclosure. Business revenue dwindled, stock values plummeted, retirement savings lost, jobs cut, and homes abandoned, all for the lack of one thing: a rudimentary understanding of interest rates. Will this ever happen again? In some way, shape, or form, almost certainly. While the events of 2008 were unprecedented in their scope and severity, recessions happen. And on a personal level, economic downturns are a prospect for all of us at almost any given time, with the sudden loss of a job, diagnosis of a serious medical condition, and other unpredictable turns. What counts is that most of you are focusing on what you can control, which is the scope of this book, which means understanding how interest rates affect your financial health and well-being. This starts with busting what is perhaps the ultimate interest rate lie. The consequences of borrowing money can be sidestepped by complicated loan terms, low monthly payments, and long repayment periods. It's a concept that doesn't work for cars, for homes, for credit cards, for student loans, or for any other reason to borrow money that exists in this credit-crazed day and age. Once you see through the haze of imposed confusion, you will see how fundamentally interest giveth and taketh away. And as we proceed through this book, we'll show you where to make smarter choices so that interest works in your favor. For our journey, we only need two teaching tools: Truth Concepts software, a financial application used by prosperity economics advisors to reveal the whole truth about money, and fictional narrative. We're using fictional narrative because it's a good way to illustrate sometimes complex and dry material. And we're using Truth Concepts calculators from truthconcepts.com because of its clarity, sophistication, and ease of use. If you're not ready to dive into this software just yet, you can follow along with the screenshots we've included, or use any of the myriad online financial calculators for the basics. And you can always contact one of our prosperity economics advisors for help with crunching the numbers for your specific situation.